and Mark. Already said hello to Marcus and Killjoy. When we're on the stream, I'll call you Killjoy. All right. Back to here and following. Oh, for you. Should I go following or for you? I'm gonna go following. Okay. Does it show myself? I follow myself. Can you follow yourself? Good morning. All right. So look at this. Annotation. Fine. So we got this lower high situation going on, right? And it looks like if you're going to try to create a parallel channel out of it, it'd be something like this. That's a little bit off. Well, maybe it's not parallel, but what I find is when things aren't parallel, then there's more to go. Like it probably is more like this. And we need to get down to that parallel channel. If you go back to uh last year's consolidation period, whoops, you can see that after we broke down, actually we just kept going down. We had days where it trapped bears and then pulled them under. And then even when we finally started a rally, lower highs and then lower lows, lower highs, lower lows. And that went on for, it was July 1st, I believe. The breakout there was on, okay, so the top of the market was July 19. So mid last year, all the way to when we broke out again to make any kind of higher high, November 7. So basically 8, 9, 10, 8, 9, 10. So three or 4 months. Well, but let's call it 4 months. We went into sideways. Now we got November 5, the election, right? And what is this right now? April, May. This is April, in the middle of April, and we've got more than 6 months of runway ahead with war, escalating. So what does it mean? Well, it just means, be careful out there. And like I said this morning to Killjoy in the group, it's a hard penny environment. It's not an easy dollar environment. It's hard to make a penny. It's not easy to make a dollar. It's hard to make a penny. And so in those environments, you don't take the boat out into the storm. Wait for the storm to go away. So we'll know when the storm's coming. That's the thing, is that, Killjoy, you were saying you appreciated the video. I mean, I talked about it yesterday and then I cut that out and posted it. But you've got to, you have a hard time, a person has a hard time not trading, getting out of the market. And it's not necessarily because they don't know things suck. They do. It's that they're concerned and worried and have this FOMO thing inside that they won't know when things are better, and that they're going to miss, fear of missing out. They're going to miss, when it becomes good again. Number one, you've got me to help you through all that. Number two, it's much better to be out and just wait until it's so glaringly obvious, that's your level. If you can do that much, that's your level, and you're not more advanced than that. But you should do at least that. And then maybe during that time, like I said yesterday, study to see if you can maybe get a little bit more advanced than getting back into trades when things are obviously incredible. When everything is great, that's a great way to put it, quote unquote, everything is great. Until we can say everything is great, kumbaya, don't put your capital in. Now, what I'm doing is I got a hedged portfolio of credit spreads. So we'll see how that performs under this correction right now and global political tensions. But I've got it fairly well hedged up at this point. Um, I'm still, I've got half of my positions hedged into iron condors, and then I've got a small number of bearish positions, and then I have another set of positions that are bullish. Little by little, I'm going to be putting my capital work and replacing long type positions in a balanced manner, trying to get as many bearish positions as I have long positions. And with credit spreads, that should do the magic. That should do the trick. So we'll see how it performs through this correction. But right now, the market, yeah, we got GDP next Thursday. I think that's the next time in which anybody can get excited about anything. Although we do have Netflix earnings tomorrow, and we've got quite a few interesting earnings releases next week. I think, Apple, Microsoft, Amazon, it starts to ramp up next week, and then GDP hits. And by the way, tomorrow we have initial jobless claims, so that'll be slightly something to either make things worse or add some support to this correction. But today we've got nothing. So, and this market has plenty of room to just trap bears all day. I would highly recommend you don't get in anything today because there's no reason to. The market environment shows, don't allocate capital right now. Sit it out. Study, research, test. And but we'll see how it goes. One of these days, something's going to happen. That's why we show up every morning. Mark Minervini sat out the market for 6 years in his first incredible runs. He sat out the market for 6 years, but showed up every day waiting for it to turn around. And the day it did, he started getting back in. The guy has turned nothing into hundreds of millions of dollars. He's one of the greatest growth traders there is, Mark Minervini. So, they say sit out power. You got to have sit out power. But Dan Zanger put it nicely the other day in that interview. It's the art of sitting out. It's a thing. It's like, can you go beyond mastering it? Can you be an artist of sitting out? It's great. So what Zanger did was he followed the leaders into the market. So when leaders started signaling, you hopped on. That was like Nvidia and AI type stocks in November. And then when the leaders started failing out, that's the end. When leaders fail, that's the end of the run. So we're going to wait again for leaders to start to signal, and that's not going to happen for at least just a little while, a week or two. Hey, Ben, welcome in. All right, well, we've got 7 minutes till the market opens, and I already looked at all the opportunities. There's nothing good out there. Um, really. What is this? I didn't check this one. United Airlines is up 7%. Yeah, but look at that. I mean, on earnings. But look at that. It's not a very good formation. It didn't leap above a pivot point, so it's not a catalyst break and run type of situation. And you'd have to have price go from $44 to $49 today, which it won't do, maybe, in order for it to become a catalyst day. So no catalyst day, no trade. All right. We're all set up. I'm in SMCI long. Yesterday had a good day, popping up and over my put credit spread break even line. SMCI, yeah. And then, like, for example, I'm in JP Morgan short. I have a call credit spread. Let's see if it shows it. No, I didn't ever draw it in. Ever since Catalyst dump, the Catalyst dump created a never look back trade. My CCS looks like this. Let's take a look for a sec. View trades. So that was on the 12th near the close of the market. I sold 12th near the close of the market. So it was probably down here. I sold the May 17, 195 200 call. So that's way up here for 75 cents. So that'd be 195.75. My break even. There we go. Perfect. Call credit spread. Boom. So long as price stays underneath this, I'm gaining every day. As a matter of fact, right now I'm at 65% max profit. So I'll probably attempt to get out today. I've been scaling out as I can get the fills, as I can get some good fills. But I'm really enjoying and liking the fact that I have some short deltas in my portfolio. Let's see, there's one, two, three, there's 5 of you in the Zoom right now, and then there's others on every other platform. But of the 5 of you in the Zoom, how many of you understand that whole concept of what I just said, positive and negative deltas? Your portfolio has positive deltas, which are long positions, and negative deltas, which are short positions. And if you put those into a common denominator, if you change those, because each position has its actual deltas, let's say you had either shares or options, short or long, but how they move, their weight of movement on your portfolio is going to be different. Even if you try to size them all the same, the way they move can be different. One can be a high ADR% stock and one could be a slow stock. So you wouldn't say that just because you have one position of the same size short, that it would balance out another position of the same size long. That won't happen. But what you can do is you can convert all of your positions into how much delta exposure they have correlated with the market. So then that's something you can do in Thinkorswim very easily. You just check the box beta weighting, QQQ. And all of a sudden, all of your positions become the common denominator of how they move with the market. Little bit, a lot of it, what it is. And that gives you the magnitude reading on your positions. And then you're able to go in and say, oh, okay, I have 187 positive deltas and only got 15 or 50 negative deltas. I need to add 130 negative deltas, or I need to strip back my longs, in order to be delta neutral. If you want it to be delta neutral, which means that no matter which way the market goes up, down or up, you effectively aren't losing money because they counterbalance each other out. You're in a nice hedged place. That's what that means when I talk about portfolio deltas or the deltas of my portfolio. These are very important things to know and understand. But still probably they're like year 2, like later in year 2 type stuff. If you had a 3-year, like beginning, intermediate, advanced 3-year plan for becoming a better trader. But portfolio management, even though it's kind of a year 2, year 3 thing, even on the expert side, year 4 plus, I feel like that's something that everyone should get down in the beginning, because you just won't know what the hell's going on. And it helps you understand what the hell's going on with all your holdings. Ben says, I did not understand that. But Ben, what? Now you do? So that's good. I'm changing the world one person at a time. Unfortunately, new idiots are born every day. I'm not calling you an idiot, Ben. But yeah, my great grandma, when I was, I don't know, 6 years old, I remember she told me there's one born every minute. And I'm like, what? She's like, stupid people. She is great. And anyway, that's an expression. One born every minute. Apple considering new factory in Indonesia. Jesus Christ. Like they need to beat down their stock anymore by spending money, reserves. I mean, I don't think this is the time to do that, but okay. Considering it, okay. But I would see that as a negative, unless the economy picks up and unless Apple picks up, right? Like, you know what we're gonna do during these economic and global conditions? We're gonna fucking create more. We're gonna spend more money. Not the last time. All right, let's take a look at the market as the market opens in 1 second here. Bing, bing. Here comes. Bing, 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 bing. Ah, I don't believe that GPS really is. It says it's a signal, but I don't believe GPS is really signaling. Now, GPS was a leader. That was a retail leader, the Gap. It was on a fantastic run. When it was over, it's really not definitively over yet on the Gap, but others like Nvidia or well, Nvidia is pretty strong too, but there's other leaders that should have signaled to you that it's over, at least temporarily. Looks like the market's selling off of the open, so red candle so far. Oh, I'm curious how Apple is reacting to that, what you just said. All right, well, it's dojiing. It's basically sideways and red, but so is the market. Well, I gotta check on my Costco bearish position, which is a call credit spread because it looks like it's down, which means Costco must be going up. Take a look. No, not really. It's just gapped up a little bit. So it's nothing dangerous. But between here, yesterday's close and here, yeah, that's a differential. But I'm still skidding along my break-even line. I'd like to be below it, but that's the way these trades work. After a while, after several days or baking in the oven, suddenly it does a zag instead of a zigging, and then it flies right underneath, and then you've got 50% gains profit point, max profit 50% take profit point. I guess Randy is on a vacation or something. We haven't seen him for the last couple of days, but he keeps checking in. But he's on a boat or a cruise or something. Anyway, that's none of your business. Hey, Carl. Good morning. All right. Well, the market's staying red, and let's take a look at all the metrics. QQQ, S&P 500 looks almost parallel. The VIX is pulling back a little bit. The 30-year is down to 4.725. Gold sideways. Oil sideways. The Dow Industrials moving up. That's inflationaries are moving up. Yeah, base materials are completely corrected from yesterday. They're up. Yesterday was a down day. They're up now, but it's very minor. The whole day is moving in very minor fashion. Minor, especially compared to the huge sell-off day 2 days ago. There's been two of those, when you look closely. And that last one 2 days ago broke under pivot, including broke under the prior low that it put in, but now it's really fully broken the uptrend. You can usually see that with that gamma line. If you close below the gamma line, that can be a a flag, a red flag. But we've had that before back here. Didn't break pivot though at that time. So the pivot overrides all. So we're now pussyfooting around with the pivot point, which on the Qs is 433 area. And that's about where we're at right now, 432.50. So when you break down, support becomes resistance. When you break out, resistance becomes support. Just write that down. Go into detail and research that on your own, or / we'll talk about it in master classes sometime. But so we have now got kind of a resistance going on at those breakdown levels, and we could definitely, do our best to rally through them on perhaps Netflix maybe has some positive earnings, and next week we'll have some positive earnings, and we try to push up through it, but we're still in a resistive state, in a state in which the market is under pressure, and there's pressure out there on the market. nothing really turns this market around, even before GDP and even a good earning surprises until war escalation, until war talks or global political tensions, geopolitical tensions de-escalate some. Any de-escalation would be a positive. But if there's no de-escalation, then there could be escalation. And, it's not going to be the right environment to be plugging your capital in, depending, depending on, let's say Nvidia posts incredible earnings. Maybe you could have a trade on an Nvidia. If it did, actually earnings on Nvidia aren't for like a month. So we sit and wait. Now off of the open, you can see here my meters. I like to call those my meters, are about, I don't know, 55% green, maybe 50%, 55%, slightly a little bit more green than red off of the open. But these meters can change throughout the day. But as of right now, the health reading is our growth stocks are being bought up this morning. Well, we could take a look at a few of them. Let's see what we got. INSP. No. STVN. Definitely not. Wolf with the O. Hell no. Mobileye. Heck no. Although it's interesting how it's turning up right now. Sats. Nah. HL. No. What was the other one? Lyft. Lyft has earnings coming up in about a week and a half. Um, in the last 2 quarters, apparently outlook has been improved, but in general, this company is dying a slow death, I think. Investors are saying, hey, outlook looks good, but maybe only in the short term, like a 1 or 2 year outlook, versus, let's say, Uber saying, yes, for the next 5 or 10 years, this is what we expect, and it's all up, right? So, I mean, this company looks like long term down, maybe short term up. HL Para, CLS. No, CLS, Celestron, I think that is. Celestica. Okay. That looks great. It's not an entry right now for options because ER is in a couple days and there's probably nothing for you to do with it with shares either. But that CLS is in a beautiful uptrend. We like that. This whole topping area has remained bullish. It's healthily sideways, slightly even tilted up. You can kind of see that with this blue channel line, which is the um I'm regression line, a statistical regression line. Wolf Elf today is having a good day. We love Elf, but it's been, it had a really bad day off of the other one, not Estee Lauder, but another makeup product people. But Elf's fundamentals look good, but yeah, it's beaten down. I think it's definitely under pressure. What was the other one? It was Elf and Estee Lauder, EL, but this one particular stock did really bad. It's probably in their news history. Anyway, it's neither here nor there. Micron looks great. There's a high tight flag holding, and there's runway to be in it. But I don't know that I'm going to add longs to my portfolio right now. I'm probably going to add shorts. That brings me to this. These are the top 50 weakest S&P 500 performers this morning. So that'd be JBHT at the top of that list, and yeah, they're down huge. We really want the ones that are still going down. PLD. So, looking for shorts, I will be looking for something that just looks like it's undeniably going to continue to go down. That's what you're looking for. in a short. I mean on a daily basis. I mean tomorrow and et cetera, et cetera. I don't mean, oh, in general over the next year it's going down. No, no, we need to make a trade, so we need to get in and for 1 to 10 days be right. So we don't really care about big outlook, although the big outlook creates sort of weather conditions for the stock. ODFL. I'm looking for more negative looking, bearish looking stocks here to potentially open a bearish position on with runway before ER, meaning we need time, at least 24 days, at least 3 weeks. Look at this one, NRG. How is this having a bad day? No, it's not. What? Anyway, that search goes on. All right, guys. See you in the group. If you don't have any questions, always be asking questions so that by the time we reach the end of our program, I'm able to answer them. Now, we're at the end of our program. Have a good morning, everybody, and I'll see you back in the group. Thanks for showing up. Stay safe out there. All right.